2021. The options I want to be concentrating on this week are the Friday, March 5th expiration. I took the day off, half the day off Thursday and the full day off on Friday, but I wound up getting sucked in because why not? I mean, look at this like continuation of the sell-off that we were getting on Friday. We ended up breaking down at our low of the day, breaking down through the 50-day simple moving average, which is always, a scary thing. The last time we did that was back here on the final trading day of January. We broke down through it and we sunk all the way down here for a 1-point look into this gap that would have taken us back to the February 1st close. But we only took like a 1-point look into that gap. We reversed and rallied back up. I think we rallied to a higher high of the day. I can't remember whether we did or not, but we did have a nice little rally going. And in the final, the final 20 minutes or so, we started seeing a sell program hit. And we wound up falling all the way back down here and closing just in the nick of time before we could break that 50-day and that 2021 halfway back. We cemented in a higher February all-time closing high. Not February, but a higher monthly all-time closing high. January closed down here and missed it. Here is where our December close was, right here. This is where we go positive or negative on the year, and it's also where we go 5% off on the year as well, just right around here. But we made a higher monthly all-time closing high, held the line above the 50-day and above the 2020 halfway back, and at that low of the day, we took just that 1-point look into that gap, and we found buyers. So to my mind, this was a gift at the end of the day to get those calls down nice and cheap for next Friday. Come all the way down to the 39.25 strike, and I picked up some of those. I'm looking for us to have any kind of gap up open on Monday, because we have to open flat or higher, otherwise we'll have an open that breaks the 50-day simple moving average. We close so close to it, and it's a rising line. It's going to be right in line with our close from Friday when we open on Monday. So we need any kind of higher open, and I think we'll get moving to the upside. And by Tuesday, I want to see us closing above 3,900, closing above the 10 and the 20-day simple moving average. I think that this is a setup that's exactly like what we saw back here in the last week of January. This sell-off in the last week of January had nothing to do with anything fundamental. It had to do with, or geopolitical or anything like that. This just had to do with the GameStop short squeeze that was going on in some hedge funds that had to liquidate assets in order to meet those margin calls, and so we had a market-wide sell-off driving all stocks on all sectors, washing us out, and we had kind of a washout effect the last 2 days as well of this week we just traded. On Tuesday and Wednesday, these were the last 2 days to settle stocks in the month of February, and then Thursday and Friday, they were all selling in March. So I pumped it up to dump it all on out. But this was a very controlled and calculated place to reverse on Friday, and I think it's sending us a message that we're going to hold this all together and continue on up. And just like we saw back here to start February, we had a 10-day and a 20-day simple moving average, looking like they were veering towards a bear cross. Same thing that we have going on here, and this had to be taken care of within the next couple of sessions to fend it off, and that resulted in this nice rally that we got. So we have the same thing occurring here. So I got in on some calls because I think that's going to pretty much repeat that pattern. That's what I think, and that's what I'm positioned for. If I'm wrong, we come in on Monday with any kind of a lower open. Any kind of a lower open is going to be a weekly and a monthly gap down open, and it's going to be below the 50-day. So that's like a 3-strike bearish open. That's the kind of open where we would flush down really hard off of the open, and I think we would at minimum come down here and fill this gap. Chances are that it could just be a flush like that looks down here, reverses, fills this gap and reverses and moves back up. Or we have another nasty day to make this 3 in a row, and we just continue lower. We break down into February 1st's range, and we maybe even go so far as to make a lower low for the month of March to start us off, making a lower monthly low below the one that was made in February. Fill this gap into January 29th and test that January 29th low. I do think that this is where the selling would stop, right down here. So if you come in on Monday and we have any kind of a gap down open, you probably want to look at some puts, and your first target is going to be here at around 37.73, and if that breaks 37.50-ish, for a hold where we either stay 2021 positive or we go negative. We'll be at the 5% off mark here. If we cannot hold above 5%, we're going to go at least another 1% down. And that gets us down here to fill this gap to the January 29th close at 37.14, if not taking a look below that gap and testing and holding above the 3,700 line, the low 3,700s altogether. Okay, let's take a look at something else here too. On that bearish scenario, if we were to test down here towards the January 29th low, that aligns right here with holding and testing the bottom of the bull fork that we're in. Our median line of our bull fork is where our current all-time high took about a 1 or 2 point look above that, and we rolled over. So if we are going to sell off further on Monday, it would be to test the bottom of this bull fork here. I think that aligns very well with testing and holding above the January 29th low. This bull fork rises to about 37.01, 37.02 on Monday and continues on as the week goes on. And then one final thought too about the monthly chart here. Like I said, I'm bullish and I'm positioned bullishly, but I'm showing you some alternative thoughts in case I'm wrong about that. Here's the monthly chart. We had last year, starting in April, we had a 5-month rally where we made higher monthly lows in a row, 5 in a row from April on through August. And then in September, after making 5 of those in a row, September, we cleaned the palette, cleansed the palette and made a lower monthly low, and then began a new set in October. And where did we just cap that off? We're with a higher monthly low in February. That makes 5 in a row. So are we going to have one of these palette cleansers here with the month of March dipping down here below the February low, and making a lower monthly low to sort of reset for a new pattern of these? Maybe that is the motivation, and getting it all done within the first couple of days of the month, and then just looking at the rest of the month as a run out from there. Because like I said, I hope I mentioned this at the beginning of this video. I've shot this video about 5 times now today, but we go into the ES quarterly contract rolling over, not this week, but next week, Thursday night. That rolls over into the June contract. I would think they want to get that all-time high that ES has made in the overnight session resolved in the light of day with the S&P 500 before this contract expires. So I would think we're going to get that done within this next 2 weeks. So if we do have some weakness to start off the month of March, maybe it's just to do this this thing where we look below the February low, test that January 29th low and hold it. That would hold us well above at least the January low. And what's important about the January low is that's our 2021 low. So we want to see that 2021 low hold, build a base for us to launch off of. Okay, that's it. Have a great rest of your weekend. I hope this video helped you out. As always, good luck and good trading.